I think you would feel more fear once there's a rebound in the economy, in missing out. Hello everyone, this is Ronan Blue, just taking my daily walk here today. And today's topic would be on how to buy stocks and real estate during the lockdown. But a lot of you might be thinking, are you crazy to invest during a pandemic? And it's a very reasonable question to ask, especially when it's so volatile right now. And you know, there's millions of people losing their jobs, and there's economic uncertainty in the future. But when you think about a recession, I mean, recessions have occurred throughout our entire history, our economic history, and it's actually gone through a lot of cycles. Some people say that there's in theory economic reset every 5 years or so, but then it's not as simplistic as that. There's a number of different resets in history, but they have a general idea of these cycles, especially when it comes to Keynesian economics. Keynesian economics is what we learn as a school of thought through our educational system, through the socialist educational system. But there are those who also have a contrarian view as well. But recessions, they do create opportunities, and yes, it does cause for the loss of millions of jobs, and yes, it does, if you have a portfolio, you know, affect your portfolio and it drops in value. That's what happened to us as well. Our portfolio at the lowest point dropped close to 30%, and we were scared at first, but you know, we always had that mentality of having absolutely no debt, and just by holding out was probably the best solution that we figured when it did drop to that point. And it turned out to be a good decision because the stock market has returned back to its levels before the pandemic. So it's actually rising higher, but that's another story to talk about. But what I'm trying to say is, yeah, there's a number of different opportunities right now. And when you do invest, whether it be into the stock market or real estate, you're actually creating jobs, right? Like for real estate, for example, when you purchase a property, there's so many people connected to that. It's always about the exchange of money from one hand to the next. And what you're doing is you're creating jobs for contractors, and you're creating jobs for the real estate agent. You're creating jobs for the lending firm. Like there's a number of different you know, connections where people exchange hands, and those same people, the contractors, they spend that money to, you know, pay for the gasoline. And then what happens there is once the gasoline is paid, the gas attendant uses that money towards something else. See, there's always that exchange, that cycle of money that occurs whenever you invest simply into the stock market or simply into real estate. So you have to keep that in mind as well. That throughout history, especially if you look at 2008 as an example, during the Lehman shock, using that as an example, we also saw that same effect where people did start buying real estate at its all-time lows, and they put their money into the stock market at the all-time lows. It wasn't actually the all-time lows, but all-time lows within the last 20-year period. But look what happened. You know, of course there was government intervention as well with their monetary and fiscal stimulus, or QE, quantitative easing, to artificially prop up the markets there. And the same thing is happening right now. The US Fed, as well as the central banks in the world, are printing as much money as possible, funneling it into the economy to artificially prop it up as much as they can anyways. And unfortunately it has a side effect in killing the US dollar. So there are actually other types of assets you can invest into, such as gold and silver, physical gold and silver stocks as well, and also cryptocurrencies. So all of which we are invested into. So it also gives you the opportunity to start a side hustle as well, since you're in lockdown. So not only can you invest into stocks, you know, possibly real estate, and you can create a side hustle as well. So even for real estate, you don't even have to buy physical real estate. Although I've seen some ingenious ways for people to buy real estate right now online with those virtual tours. But you can actually purchase real estate without even have to own nothing physical. And that's through REITs, REITs, real estate investment trust. So they actually give a pretty good percentage back to you, but it's not investment advice. We have REITs in our portfolio, and some of them actually cut their dividends temporarily, especially our hotel REITs. But for our other REITs, they're just fine right now, and we're just waiting for a recovery. And we all know there's going to be a recovery. Maybe not in the near term, but within the next year or so, or 2 years, I believe there will be a recovery. And it gives you the opportunity, since you have time right now, to figure out how you're going to grow your wealth during this time, and how you're going to, you know, play this pandemic. So when you do create a side hustle of some kind, it affects the entire economy, really, not just yourself. So it might actually, if you're successful, branch out into other profitable businesses as well. So if you have a particular idea, especially right now, it might be a good opportunity for you to start. And there's a lot of fear out there, right? And because there's so much uncertainty, but when there's fear, that's when you have to, you know, get out of that mindset and figure things out with your feet planted on the ground to what might be realistic for you in the future to try out. Because if you have too much fear and you have that cash balance sitting on the side there, you know, you're going to lose out, because all that cash is not going to be doing anything for you if it doesn't exchange hands. So the way it does exchange hands is by investing, or investing into real estate, or starting a side hustle. I can go on, but I think you get the idea. Because right now, because the savings rate has drastically increased, the average savings rate anyways has drastically increased from 6.5% to over 20% right now. So that's a lot of savings for the average American. So what would you do with all of that money that's slowly gathering into your bank account? And I do see people kind of spending on materialism. There's hints of people buying those new cars, actually. Yeah, so I think during the Lehman shock of 2008, they had car buyback programs like cash for clunkers, I think it was. But I think, yeah, people are having to save a lot more, and they're spending on cars. But to be honest with you, I think that's a waste of money. You know, you should just keep the car that you have currently and just maintain it, and use that money to invest the extra money. You know, make the money work for you. But there's a number of reasons why people are scared, right? You know, even if they have that extra money in their bank accounts, and then they go ahead and invest into index funds, as an example, and then to watch those index funds drop right the next day. It's not a good feeling, right? But then there's ways to adapt to that as well. Like for us, whenever we purchase individually selected dividend stocks, we kind of expect it to drop, you know, the next day. So, which sometimes it does, sometimes it doesn't, right? You never know. In some situations, you might think it's a gamble to invest that way. But we also had the mindset of the longer term, and what we do is we average down. So we have increments of certain amounts of money on a monthly basis. Sometimes it's a weekly basis, depending on the stock that you purchase. So you see the share price you buy at a particular market value, and let's say that drops in price, but gives you the opportunity to purchase that stock at a higher yield, because as the share price goes down, the yield actually goes up. So as long as the company you're invested in, you believe in, and it has a good reputation, a good balance sheet, a good future, and it has the ability to also sustain itself during this pandemic, then you're in good condition. So you'll be actually taking advantage of the stock price going down, so you can purchase at a lower amount at a higher yield return. So that's how we think anyways. And another thing is, you know, we have rental property as well. You have that fear of buying property, getting those tenants in to your property, and let's say one of them loses a job, or maybe another loses a job, and you have that fear. But there's been systems in place right now, you know, that would help the tenant. And well, not entirely. I mean, there's evictions as well. But the point is, you know, during these recessional times, there's going to be a huge disruption of normality. So those people who, you know, thought about buying a home at that moment, and that's in the tens of thousands of people, right, thinking of buying a home, they decide not to. You know, they continue to rent, and then they occupy that space. And what that does is it creates more demand for rental property. And usually during recessional periods, you see rents kind of rise because people aren't buying homes, right? I mean, but then on the opposite perspective, there's people who actually buy homes and they take advantage of the lower interest rates. So the perspective is different, right? It's a seesaw effect here and there, but there's an imbalance when there's a recession. It's the seesaw keeps going up and down, but there's a level of stabilization in the middle, and that's where you want to play it, right? That's where you want to, because you're not gonna, you know, gain anything unless you're in it. So that's one crucial point as well. Because let's say that the you know, economy does recover in the next 2-year period, and the market starts to rebound, right? If you look at the stock market right now, it's at all-time highs, and people are buying houses, people are buying cars, and also it's a deflationary environment right now. And what I mean by deflationary is that all the essential items are going up in price with inflation, but the non-essential stuff, the retail stuff, you see sales everywhere, right? It's like, you know, there were a lot of sales before, but now that there's a pandemic, the sales have exponentially escalated. But even if it has, what I highly suggest you do is not focus your mind on buying anything. You know, what's the point of buying a bunch of stuff that's just going to sit in your garage or your attic to collect dust? Use that excess money to invest. Here's your opportunity, right? And like I mentioned before, that there's a record number of millennials and generation X or Y, one of the generations, that are creating their stock accounts and in record numbers, and they're waiting for their accounts to be approved by the institutions that they choose. But they know that that's where you want to put your money right now, because recessions are opportunities where millions of people in past history have become millionaires, right? And it gives you the opportunity to really sit down and make those selections of high quality companies within your stock portfolio. It gives you that opportunity to find a home, not necessarily to live in, but maybe to find an opportunity there to rent it out in the future, right? finding that good property at a good location, and but then in the end, yeah, like I said, I think you would feel more fear once there's a rebound in the economy in missing out, because you'll be missing a lot if you don't put that excess cash into the system. And like I said, when you do invest, you're actually helping the economy recover. So it's not about greed either. It's about, you know, it's about making sure that you have a stable nest egg in the future, because your retirement fund is important for you. Because at this rate, I'm not sure, you know, after all of this, all of the stimulus that's coming into the system by the governments, the central banking systems, the taxational rate is going to be extremely high. I mean, we're going to have to pay all of this back. And how is it going to be paid back? It's going to be paid back by taxation. And people in general tend to overestimate the events as well. I mean, if you listen to the media every day from any country, it's probably all about COVID-19, the pandemic. And it instills fear into you, right? And although it's important to keep up with the news, there's also another agenda behind these news broadcasters that keep, you know, not advertising, but it's just, there's something beyond it, right? It's you should never believe that the end of the world is coming, because we have survived several events in history, and we have overcome them, and we have all of this knowledge in front of us, and all of what history has, you know, shown us as well. So it's really being overblown, and you have to understand that. Maybe it isn't as bad as you think it is. So take this opportunity really to find ways to invest and better yourself as a person. You know, start a side business and make yourself a better person. See how far you can get yourself with maybe a unique idea that the world needs and where you can profit from. Because for us, personally speaking, we actually started investing in 2008 during the Lehman shock. You know, we took that opportunity to really pile in. I have never seen stocks that cheap before, and it gave us really the open door to opportunities we would have probably never had before, being a newbie investor back in 2008. But look at us now. I mean, it may sound like I'm showing off, but you know, we're not showing off. We're just I'm just saying that we achieved financial independence, and it was money that we worked pretty hard for and made the right decisions. And I'm saying that whoever's watching this, that this could be your opportunity as well, you know. So help yourself, help the economy as well. You investing will help others. Just think of it that way. So it will benefit everybody if you make the right decisions there. And maybe stay away from materialism this time around. Who cares about the cheap sales out there? What you definitely want to do is make your money work for you if you're not going to spend it. And a great way to do it is just by looking at some index funds and ETFs, and maybe even mutual funds, and or individually selected dividend stocks. But whatever the choice that you make, will definitely, you'll see the benefits. You know, maybe not immediately, right? You're thinking, my $1,000 I invested, I'm only making like $5. But then if you multiply that $5 by 12, getting that $5 every month by 12, and if you continue to invest on top of the money that you're getting from compound interest, you'll definitely see the exponential growth. And we have. So don't just think of it as just $5. I'm only getting $5, but let's say you spent that $1,000 on an iPhone. What are you going to be doing with that iPhone with features that you'll probably never ever use. You know, it's just from that perspective, I'd rather put that $1,000 and make it work for me and get that $5 every month and grow exponentially, keeping it ahead of inflation as well. And the thing is, nobody could predict the future, and don't let the media convince you of what the future will bring either, right? Nobody knows. But what I do know is everyone has that choice of making those right decisions, especially if you want to protect yourself and your family and your retirement in the future. Like, it's very, very important for you to really know what the do's and don'ts would be during a recession. There's a number of basic ways to know. I mean, don't forget to invest. Well, I think I have my vlog here today. Tell me what you think of how you can invest into the stock market, or invest into buying real estate, or start a side business in the comment section below, and tell me what kind of side business you would start. If you like this vlog, please don't forget to give me a like, subscribe if you haven't already, and hit that notification bell for more of my coming content here. Thank you for watching my vlog. Be free, gain wealth, and travel far.